And disconnecting it is, sir.
Okay.
Yes, sir. In YouTube it's coming. I can see.
Is it live?
Yes, I can see it.
Okay.
It's alive.
Hello friends, I had a little technical glitch and extremely sorry for the delay. If you can see me and hear me, please type something in the message. Hello friends, I had a little technical glitch and can you confirm if you can hear me? Yeah, thank you very much. I'll straight away share a screen, and once again, apologies for getting delayed due to some technical glitch. And let me start by wishing you all a very, very happy new year. Hope this year 2022 proves to be as prosperous for all of you as was 2020 and 2021. In this presentation, we'll go it in a way that we'll just see the macro points that are going to affect the stock market in year 2022 and at a national level, and then go into the sectors and finally go on to the portfolio that is recommended. Let me also have a clear disclaimer here that I'm not any SEBI certified or financial consultant or equity advisor. So this purpose of this meeting is to have a learning session wherein using certain basic fundamental principles and see if we can help each other in making best of the opportunity that is there in the market in front of us. I'm now sharing the screen. Yeah, you can see it now. It's just saying welcome for the growth 2022 is as I named it. And first point, as I said, we'll start with the global factors that are going to have a play on the stock market. First, of course, the major, for a third year in a row, we have to think of pandemic. Though in 2020 beginning we didn't know it, but in a couple of months it was all over. And as we were hoping that things are coming to control towards the end of 21, we had this Omicron and new variant coming up, and it's spreading so rapidly. In last 4 days, India also, the number of cases active has like gone up 4 times. What was going at average daily new cases of around 6,000 is now 27,000. And at this pace, it could go anywhere. It will have an impact. How bad? I think in a way, world has learned to live with it under the circumstances. While loss of life or getting somebody, a huge population falling ill is never a good thing. But at the same time, humanity has survived and evolved over the years to deal with all kinds of challenges that are thrown at it. And I'm sure we as a human race will come out and triumph over this adversity, and we'll learn certain things and then move forward. On the economic side, impact definitely will not be as much as it had in the year 2020, because then in trying to figure out what should be done, what shouldn't be done, then there were a lot of lockdowns and huge economic impact. Now we may not hopefully go that way. But then there are other factors that would come into play in the current year. Because of the pandemic, there were huge amounts of stimulus packages announced, mainly in the US and Europe. Trillions of dollars were given as subsidies to the businesses, or as grants to the businesses, and also grants to the individual, say, citizens. So there are a lot of money sent to bank account of people. A lot of people believe that last year's stock market boom is a result of liquidity that is generated by from a Federal Reserve fund. Government takes the funds and sending it to citizens' bank accounts. Though we didn't have such luck in India, but even in India, we had to spend a lot of money onto the health side of it. And then the poorest, almost 600 million people have been fed or given free of cost rations for good 18 months. That is a substantial economic cost to that. And we can take pride that a government is able to do that, and the economy provided it the strength to do that. So a lot of these stimulus packages will need to be and will be withdrawn during the course of the year. That is what the expectation is. One of the important part of the stimulus package is the low interest rates. In order to survive such a major shock to the economy, the reserve banks across the world, including India, have reduced the interest rates. In the US and Europe, it is almost as close to zero as it is possible. And it has been kept at that. Typically, at a first sign of inflation, the interest rates are increased, but they're holding back on that so that it doesn't become a double whammy for the businesses and the economy. So, but at some point, they will need to take the call to increase those interest rates. How is that relevant to our stock market? Nowadays, it's a global market. So a lot of funds that invest in Indian market also come from abroad. So a typical US fund has certain amount to invest. It looking at options. One of its options is to invest in own US treasuries or securities or their own market, where if the interest rates are very low, then they may find it attractive to take the risk and invest in a developing market. That is, they will do both, but give a higher allocation to developing market like India. But if the interest rates in US increase, then they'll pull out funds from such developing markets and other asset classes and start putting some amount into US treasuries and all, where they're getting some higher rate of interest. So that is so you may not be able to do anything about it, but you need to be aware of this thing as an investor in a stock market. I mean, rather than thinking why is the stock going up or going down, you should be able to understand the reason, what is happening at that point of time. Another major factor that is going to play out during the year 2022 is there is a China factor. When I say China factor, what I'm referring to is there has been a lot of negativity that built around Chinese. One, of course, the pandemic itself, most people believe has started from China, and there is certain responsibility and liability there. Though how it will be fixed or how it is going to be made accountable is a different reason. But in a relations and in a feel good is no longer there. Previously, if you remember, China was seen as a goody place, though there was it's a communist place, not a democracy, all of that. But then, yeah, friendly people, nothing to worry. They provide us a cheap or affordable goods. It's the world's factory, so why not, kind of thing. Now, to the extent possible, people want to restrict that part of it. That is where you would have heard the word also like China plus one kind of thing coming into play and being discussed by major economies. What that means is, let's not depend on China itself for everything. Rather, we need to have alternatives. And that is where say a lot of business activity and manufacturing that is almost monopoly of China is shifting to other markets. So there is an opportunity there for India. How far it goes, time will tell. But there will be the element of play during the current year. Then if you look at within India, what are the things going right, what is not going right at a macro level? One is we had this political stability for last 7 years or something. Before that, we had a coalition government, and in the present government is almost, though coalition government, it's by choice. So the main party is not under obligation to say listen to everyone else or be under pressure all the time of survival. So the strong majority that the say BJP got in the last election ensures that there is no political instability within. But why I brought it out, and that too at the top of it, is that in a couple of months we'll be having an election in Uttar Pradesh. Though the central elections are going to be in 2024, another more than 2 years away, but UP election will act as a bellwether to expect. So if BJP again gets a majority in the UP elections, which most people are predicting it will, in that case, there will be a sign of political stability for another 2.5 years, and expectation that probably the same government can win ahead at that 24. So that is a long time away, but at least this will give confidence for the current year. There will be no political related negative on the market in 2022 if the UP election goes the way of BJP. Here I'm not trying to project or talk of in favor or against any particular political party. It is just analyzing it from an economic impact side of it, or more than economic, I'm talking of a stock market impact of it. If, for example, there is a BJP loses big time in here, then it would have some negative on the market itself, and on certain stocks more and certain less, but there's going to be impact. Then pandemic within India. So here again, over last year, from peaks that we saw in April, May period, it has come down substantially. Active cases were below 1 lakh for a period for last month or so. Now it is shooting up again. We need to see how it pans out. But in a way, our economy is not going to go into that say strict lockdown, and thereby we had a 25% negative growth in a particular quarter. Then next quarter it was 9%. Only then a turnaround happened, though it is quite a steep turnaround, almost a V-shaped recovery as they call it. Good economies and good governments always use say any crisis to bring in the much needed structural reforms. Why that is this? Structural reforms are what everybody knows is required to be done, needs to be done. But generally they may not be popular because of the pain it causes and the little anxiety it causes among the population. Nobody wants to disturb the voters. So when there is a problem, then you do things which you otherwise may not do. So that is turns out helpful in the long run. For example, extreme cases in 1991, as PV Narasimha Rao became Prime Minister, we were at a state where we could be defaulting on external debts, almost like a situation where Pakistan is today. Then they used that resource and almost pledged our gold itself, and then carried out economic reforms, which didn't solve not just the immediate problem, but by doing that, we set onto a course of say long-term growth, which is still sustaining after 30 years. Of course, there are incremental steps being done by every government, but taking that major, say, different direction is important and not easy, and that is where a crisis comes in. I personally was hoping that this pandemic and the deep economic crisis would lead to structural reforms. Some have happened, but not to the extent it could have been done. It is in a way like a the good side. What has been done is that linked to that Atmanirbhar Bharat, and so the PLI scheme is one of the best structured industry incentive that has been done in a very, very, very long time. So it actually is structured in such a way that companies which want to invest and actually grow incremental business in manufacturing. Manufacturing is important because it provides employment to not just the white collar or top hierarchy, but a lot of blue collar workers. And on a mass scale, millions of jobs can be created in manufacturing. And that was the backbone for growth of China over last 20 years. So this PLI is structured such a way that it's not another scam or easy money giveaway to businesses, but you need to actually invest in, increase the capacity, and on the increased capacity, you are getting incentives, which makes it profitable. It's brilliantly structured. It's going to, I think, help the country, the economy big time in long term. But there are big negatives also. The agri loss was one which was such a thing, much needed. I mean, overdue, delayed more than 70 years from independence. It could have been done, but not done. It was finally done, but unfortunately, it was withdrawn. That I would look at it as a negative as the overall economy level. And then another thing is disinvestment, where it's not picked up pace. Government seems to lack. It wants to do that, keeps announcing, keeps talking, keep putting a target in the budget, but seem to be going in circles, not figuring out, say, how to go about it or how to speeden it up. Probably, I mean, if you remember previous Vajpayee government, then they had a ministry called Disinvestment Ministry. That is a clear intent that we are in favor of disinvesting this public or the PSUs, government-owned companies, because the logic is government doesn't need to be or shouldn't be in business of running businesses. They should govern and then let the private sector run the businesses. So the present government talks about it, but nothing much is happening, except a big success in disinvesting Air India, which is a pretty small business to disinvest. Much larger things could have been done or should have been done. That's not going anywhere. So unless the government gives up a little hypocrisy of not openly calling it disinvestment or putting a ministry to do, on the other side, they're increasing the say government structure in trying to improve the PSUs. Improving is good, but then it's never as good as actually privatizing that. So there it is again where it needs to pull up the performance, and it will be in the long-term interest of the country. One good thing is public spending has increased, and that is actually has also been the main stimulant the government has done in terms of the economic, helping the economic recovery. So instead of giving money to the businesses, they started spending in public domain. When I say that, that includes infrastructure building and various other things, health. These again trickle down to the businesses and overall good for the society. And on a small note, I just put that point, Ambani versus Adani versus Tatas. So here I'm not trying to highlight a competition between them, but I just want to add points which will help you understand how each group is doing and how is it playing it out in the stock market, because that should give a guidance to what to do or what not to do in the stocks. If you look at Ambani, it has been the largest business group by a wide margin, and Mukesh Ambani has been the the richest Indian for a long time, and by a very wide margin. Say Ambani, so their investment is into one single company, which is Reliance Industries. Of course, they have acquired a few small companies, but that doesn't add up much. Their main businesses are all under one business called Reliance Industries Limited. So they have three huge tanks, you can say, just for comparison, I put it in those tanks. One is that petrochemical business, traditional, original cash earner, and keeps pumping out cash profits year after year, quarter after quarter. Then they had started retail, which is also a very large bucket at this time. And the third big bucket was, say, the telecom, Reliance Jio. But we all under one company. So then you imagine that those three huge tanks filled with these three different businesses are interconnected. They have a tube. So whether one goes up, it benefits all three. One goes down, it also impacts all three. So petrochemical was something which is expected to go down over a period of time, and petroleum and oil and gas. It's not for nothing that Saudi Arabia and Dubai and all are investing so much money in other businesses all around, because in 10 years or maybe 15 or 20, that is in a very foreseeable near future, the liquid which they have been pumping out from under the desert and giving them huge lot of money where they didn't need to bother about anything. They could live as they wanted, and a very royal life, and the citizen, there was enough money to look after everybody, and also they could say send out enough money to fund madrasas all over the world and create fundamentalism. But now here you see Saudi Arabia holding say music concerts and trying to open up, letting women say drive the vehicles, move without male escort kind of thing. All this is not just overnight realization, or that they lost their religious fundamentalism and now they want to be like a good vibrant democracy. No, it is seeing the reality as seeing the future, and it is, we need to credit them that they didn't wait for that economy to completely dry up and then look for options. They're trying to invest well in time to do that. So in coming to this Ambani's thing, the biggest bucket which has been the strength for this group is not going to grow from there. I mean, from some quarters and year it will show profit, but then it has to decline. You have a huge business which is depending on traditional petroleum products, whereas the retail could be growing and geo as a telecom could be going. That is how they added, now trying to add the fourth bucket, which is the renewable energy, and announced $75 billion. So you imagine that there is a fourth bucket which is empty, which they'll be filling slowly, but one of the bucket will be leaking over a period of time. So that is the reason where, if you see in the stock price, in the year, say Reliance Industries has grown about 18%, impressive for any regular thing. But when you compare to other businesses or other groups as I talk, when you look at Adani, he has foreseen this probably a little ahead of Ambani's. That is how you have a Adani Green already listed, and now almost 12, 13 gigawatts of energy they already have in that, and it has reached the market capitalization. So in this period, Adani's personal wealth, which is coming from the listed stocks, has grown as it's kind of multi-bagger. Stocks at that value has grown up. His own wealth has grown up by some 40 plus billion dollars on a small base, whereas Ambani's didn't grow by that much. It's a very small percentage. So this would continue, I would expect, going forward. So maybe 2, 3, 4 years down the line, I would expect, say, Adani's wealth to be, say, at least 50% higher than Ambani, just because the business is structured such a way that those who believe in renewable energy could invest in that company. That company is growing. Similarly, there is a company for gas, different entities. I don't need to buy one Adani company, and so if they lose in the coal business because usage is going down, I don't need to lose overall valuation. So unlocking different businesses gave them the growth that we are seeing now. Of course, eventually going forward, Ambani's can do that, but as of now, not done. Coming to the Tatas, it has been a huge a turnaround for the Tata Group. This year, Tatas have performed well. Most of the stocks have given a probably 100% plus returns. But we also need to see that most of the companies have been laggards for last 10 years at least, be it Tata Steel or Motors or Power, and a whole lot of their group companies have been giving flat or negative returns for a very, very long time. So at least the new management and Mr. Chandrasekharan have been able to turn things around, and also they're preparing the group for future. That is, they're investing into this electric vehicles, and then investing into renewable energy, which will see them do well. Of course, they have their very strong TCS, which is getting stronger, and Tata Elxsi, which was the laggard in or say IT side, is picking up because of the digital businesses picking up. So, which is good. Overall, Tatas look well poised to grow in future and come out of the slumber they have been in for a decade at least. And the last point I added is, even while we are getting hammered by the pandemic and the related things, economy as well as health wise, and then losing some near dear ones or people known to us, the way we have been able to handle it in terms of there have been shortcomings, but considering the volume and the density of population we have, it has been very well handled. And the way we have been able to vaccinate mean, population more than probably the US and Europe combined. That is many kind of people, all from within our own resources. Vaccine manufactured in India, uh, distributed and say organized and everything, a kind of organization which gives a confidence to the population at large and to the markets. Why I brought this part is not just for a patriotic favor or to feel good as a country. It is more that these things impact, say, stock markets in a way that we may not directly see. Quarterly profits is what you see as a direct link to share price, but overall these things make a difference. The two, considering that today uh, the individual retail investors through their small direct accounts or through mutual funds, money that they're pouring into mutual funds through SIPs, are putting in as much money or more than what FIIs are bringing in. So that way it is a significant force. So the overall as a country population believes in the growth story of India, they will put money into stock markets. The moment they feel that government political is not stable, the leadership is, we can't trust that, or they don't have the ability, overall we don't feel good because things are not running well, then they'll pull out those money and put it into safer options and save it. So that will impact the stock market. That is the purpose of bringing out these factors at, though it may be like too long a prelude if you are just here to look for a list of stocks and portfolio. But my thinking is that you need to know the reasons. That is much more important than picking individual stock. You can pick A instead of B, or instead of C instead of A or B, which may not be wrong, but you need to, if you understand the reason why you're doing that, that is a bigger learning in this case. So these are the themes which we have discussed last year, and almost all of them remain relevant in the current year also. I won't spend too much time on each of that because it is like we talked about this multiple times: renewable energy, electric vehicles, Make in India, China Plus One, 5G telecom, finance and banks. Basically, finance banks we included because if the economy is to grow from 3 trillion to go to 5 trillion and beyond, it needs a lot of very, very large banks and financial institutions. So there is an opportunity there. Digital companies like in Happiest Minds, and even we talked of Tata Elxsi and a lot of others. E-commerce, number of companies got listed also in the current year, which are doing exceptional job in the e-commerce space. There is an opportunity there. Some of them also called as platform stocks, wherein the business is creating a platform in that there are sellers, buyers, and then it gets millions of users. Thereby, it has its own strength. Atmanirbhar Bharat and defense manufacturing, that is emerged very strongly last year. It is almost non-existent before. And gas, because more and more cities are going to get gas, piped gas connectivity for their domestic use, as well as more petrol. As we see petrol pumps, you're going to see gas pumps also. The increased adoption of gas creates opportunity. Then last point, water is to with the that is the government scheme wherein Jal Se Nal, or whatever, every home to get a tapped water. That's a huge ask, and it's made an impressive progress in that. What was a 2-3 years back, 17% coverage of Indian homes getting piped water. Now it is close to 30%, and the government intends to take it to 100%, but at least 80% by the next election, that is 2024. What it means is a whole lot of money is going to be invested in trying to provide this basic necessity to our citizens, which will create business opportunity. You can easily to guess who is going to gain from that. Any of these pipe manufacturers, plumbing products, and the companies which operate in that space. Like that, the higher points I didn't cover much now because we already discussed that in detail. Within these themes, I just wanted to segregate. Everyone is not as big or important as other. It's not a equal. I won't put money into, okay, these are the 10 themes. Let me put 10% into each of that. I would put a higher amount into some. I'll explain which ones and why. There are two themes which I marked as these are a kind of once in a century opportunities. This is not something which every year at the beginning you look where to invest kind of opportunities. Energy is over a century plus, it has evolved that, okay, starting from initially using a steam to then say using petroleum products, then gas, and that is driving the automobiles as well as the whole economy is being driven by that energy, which took more than a century to build, and it is stabilized, and the whole world is running on that. Now, this is a sudden switch to renewable energy. But if you even talk 5 years back, it was more being discussed on the drawing boards. 10 years back, it is a concept. Now, this year, that is 2021, let me correct myself, last year, 2021, we had about 130 heads of states in the middle of pandemic meeting and discussing about this particular topic for 2-3 days. So this has become that much important, that much immediate. That is to say, we need to take out or remove the dependency on the carbon fuels and move to renewable energy. That's because it's leading to global warming, and which has adverse impact and then can damage lives as well as economy of many countries. So overall, there is a acceptance, except of course we had a Donald Trump in between who believed that because there is ice cream in freezer, there's no global warming. But that apart, even then US was moving on the path and trying to do that. And India in that has didn't take this as a something being thrust on a developing economy and run away from it, but we believe that it is something that is good for the humanity and taken on targets and quite a say stringent and ambitious targets, considering that we are a growing economy, and then we are moving forward in that. What India had agreed to in Paris, say climate accord previously, we are one of the very few countries which not only achieved the goals that we set, but done it in a 2-3 years ahead of time. So what this means is our government is going to do whatever it can to roll out renewable energy as fast as it can. So this is the reason this is a once in a century opportunity. Imagine the kind of huge companies that you have in that space, renewable energy, in the energy space all over the world, from the Exxons to a whole lot of them, which were manufacturing or pumping oil and then selling it in the market. Every country had, in the top 10 countries, definitely one or two companies whose only business was pumping oil or gas and then selling it. So all of that is just going to become zero. And then in their place is going to, you still need as much energy and probably more. With the growing economy, growing population, consumption of energy is only increasing. And that has to be met from a completely new source, renewable, what we call it. Bulk of it would come from, say, solar, and some of it from wind, and a few other which we don't even know at this point of time. So this is a space you need to look at it. And it's not something you need to look at every quarter. You need to invest substantial amount of your money into renewable energy and keep it there for next 10-20 years. And this is the story. 20 years later, you're going to read that, okay, this company has become a multi-bagger and a constant compounder, because the unknown companies today are going to be mega companies 15-20 years down the line. Is it the company we are tracking now, or there's going to be another company? That is something which we can need to be continuously following. When a new star emerges and recognized, we can invite in that. But you will have to put a substantial, say, amount into renewable energy. Same is the story with electric vehicles. Ever since the beginning of vehicles, and say from the Ford started manufacturing cars in a factory in assembly line method, it has been one particular way it is done, both four-wheelers, two-wheelers. Now we're talking about this whole lot of them being redone as electric vehicles. I mean, maybe 10 years down the line, or it may be 15 years, or it will take 20 years. But imagine that the number of vehicles on the planet, they're going to be replaced by electric vehicles. Even just 5 years down the line, probably every new vehicle or majority of the vehicles that are going to be sold in the market are going to be electric vehicles. So it's not another simple basic level opportunity that you're seeing here. It's a mega opportunity which comes once in 100 years. So in a way, we have treated as luck or whatever, two say opportunities in front of you, which are once in a century kind of opportunities. So don't try to keep looking for 100 different companies. Put substantial amount of money into these two things, and you don't. I can keep repeating it every year, but it's going to be there in my portfolio. This is going to be there for at least next 10 or 15 years, because a 100-year opportunity building will take 15-20 years to have companies of the scale that are going to serve us, the humanity, for next 50-100 years. Then we go to, I mean, every opportunity won't be a once in a century opportunity. Then I listed some which could be like a once in a quarter century opportunity. So these are the opportunities that are going to be there for 20-25 years. So this would also require substantial allocation of your portfolio, but not very little as a fleeting opportunity or a temporary opportunity. What would I call a fleeting opportunity, temporary? So making vaccines for COVID. Yeah, it is big. If you find a company and if it is a public listed want to invest, last 2 years is good. But I won't look at that 10 years down the line, we're going to be making COVID vaccines. So that's a passing opportunity. We may take advantage of that for a time being. But these, what I listed here, make in India, as in manufacturing in India of a scale. A lot of products that we are importing from China, replacing them at least, because India is a huge domestic market. There is enough in our market that if you can export and get a market share there, fantastic. But even otherwise, we have a 1.3 billion people and growing consumption. So a lot of it. Just imagine we have to spend, say, 100 billion, I don't know the exact figure, importing oil and gas for our energy needs. Okay, that's bad enough, but unavoidable. There's no alternate to that. Whereas I think, say, importing electronic items or what can be made here and giving a 70-80 billion dollar trade surplus to China, I think it's a criminal. One side, China is our enemy. There's no beating around the bush in that. We are the soldiers of our soldiers are fighting their soldiers at the border. It claims large part of our territory and doesn't lose any opportunity to do things against India. On the other hand, we spend, say, we have $100 billion trade, out of which our export may be 20-30 billion, and 70 billion we are importing from there. All the items, none of it that is we are importing from India is something which cannot be done here. It either lacked a focused approach or a strategy to how to be able to do that. Now that the government through PLI and other sensitive, say, plans has made it possible, and companies or corporates have taken up the challenge and realized that it can be done, it is a good opportunity. So you need to invest in the companies which are, say, replacing what we are importing from China. It's a big dollar saving, if not dollar earning. And probably as we say make enough for a country of our size, we would have got the mechanics of scale and advantages of scale to be able to export also to a lot of countries and thereby start earning dollars. So instead of being a dollar say trade deficit, we could move into trade surplus, as China has been for a long period of time. That is essential. These two elements, making in India and being able to say export to the world what we manufacture here. We're exporting, of course, a lot of software services, but not manufacturing. That would be important because that is going to give mass level employment within the country and improve the overall per capita income. So we need to be able to start that and sustain it over next 20-30 years. Then for our per capita income to be at par with say China or beyond that, some of the European countries. Only then, till then, we'll continue to remain as a developing country, doing little better than what we are doing the previous year or the previous year, but not at there. Defense manufacturing, that is another thing. We have one of the largest armies, and we've been importing, I would say shamelessly for decades after decades, the same things, and with no ability to manufacture it in-house. The main reason for that is we just depended on our government-owned entities to manufacture, which was never going to work. I mean, some of you and I've served in the armed forces for 20 odd years, and we've known it for 30, 40 years. From a DRDO or ordnance factories, we don't get shoelaces which are worth using. We ended up using shoes that we purchased from the market, even when it is supposed to be given free by that. I'm taking the lowest, say, denomination kind of thing. I was never comfortable using the weapon issued by ordnance factory, ammunition used by that. There were occasions when I was using a captured ammunition rather than trusting, because it would misfire now and often. So it has been as bad, whatever pretenses, and it doesn't feel good to talk about those things. But public sector is a huge letdown. There's no reason for it to exist. Now that the shackles have been broken, and we are allowing private companies to get into manufacturing, we would do wonders in this space. Even if you are able to say cut down our imports, it's a huge bonus. But then once we do that, we automatically will be in manufacturing at a scale and price that will be attractive enough to export to a number of countries. So probably 10, 20 years down the line, we may not be importing net weapons. We may import some for a technology side of it, but not in a huge bulk values. So that is a huge business being created within India. So if you pick right companies in that, it can have an advantage and growth over, say, next couple of decades. Finance, we covered that. We can't grow unless we, say, have substantial, strong financial companies. That could be NBFCs, that could be banks. And of course, it has to be some very large banks, and also a lot of fintech and innovation coming in those things. Then there are some opportunities which are people talk about, but I would put them under current opportunities. I won't even look at them as a decade or kind of thing. Digital is a very big opportunity, and some very smart companies are into that space, and it is worth investing in that because they'll grow rapidly. But because technology keeps changing so rapidly, today digital may be the way forward. Maybe 5 years down the line, there may be something else which you and me don't know about. So we need to keep watching the space, and as long as the digital is the big thing, it is worth investing into that. Ethanol, I mean, here Gadkari and ethanol has been the one which have been propagating this for a period of time. Unfortunately, this timing turned all wrong. I mean, if we talked about 3-4 years back, I would have said, I mean, this is fantastic. If ethanol can, you can add 30% ethanol to your fuel. Ethanol is produced, and most of the money goes to the farmers, and then produced within India. You don't need to import. If it cuts down your import bill on fuel by 30% or 20%, brilliant. That is what everybody needs to be doing. But then it was not done. Even when it is actually in a position where it can be done, we are at a stage where we are moving to electric vehicles. Ethanol doesn't make sense to electric vehicles. It is a replacement or an improvement on the carbon fuels. So it's a kind of, I look at it in a telecom, if you remember, we had a fixed line phone where you had to stay as long as that cable was there and only talk within that. So if someone comes up with a cordless phone wherein you can move around for 5-10 meters, it is liberating, good, fantastic. So ethanol is like that cordless phone. But unfortunate is that now already mobile phones have come into the market. So yeah, now they are little expensive, not enough numbers, and connectivity signal problem, all this is there as in the beginning of mobile phone. But in few years, the landline usage also will come to nothing, and cordless will mean nothing at all. So that way, I don't see ethanol as a long-term investment opportunity. It will show little growth if, say, Mr. Nitin Gadkari isn't propagating much at this point of time. Even this would not have happened. credit to that, but then I think unfortunate that it won't sustain because it won't be required. We'll move from a carbon-based fuel to electric vehicle, not a midway. I think that is where you also need to keep in mind. I believe, and I mean, staying with a sense of responsibility that I think even Maruti got it wrong. What are they trying to do is bring gas-powered cars or innovate in that, and okay, electric is too far and will come later. Those who try to do take this middle path have always been the first to loss. Maruti has been the market leader for many decades, and this decision to go gas-based vehicles rather than electric may see the opening of space for leadership in automobile industry. Will Tata's take it or someone else? At this point, looks like Tata's, but Maruti got it wrong. I would put ethanol also into the same basket, trying to do little incremental changes when you can go the whole hog into the next generation. Gas based, as in here I'm not looking at gas powering vehicles. It is more for opportunity for home usage of gas. Now it is going through cylinders through government owned oil marketing companies, IOC and BPCL, etc. But piped gas is a lot of convenience. And though there are electric cookers, bulk of our population is yet to adopt to that, and they're comfortable using gas stove, probably because electricity is not say 24/7 uninterrupted, assured supply all the time. So you can't have electricity going off in between, and your say food is not at cooked. So that is how gas is there. It's again, that's why you put it in a current opportunities. It will go away the moment of power is surplus and available more or less. And even with a renewable energy, solar, etc., every home is going to be a power manufacturer with some improvisation. So then they'll start probably using induction stoves and gas may go out. But now it is the opportunity is there from a few handful of cities providing piped gas. Government has given the intention that it's going to go to 300 towns of big cities. Similar is the water, that null se jal kind of thing is the opportunity. Semiconductor, very critical in the current stage where everything is dependent on the chip that is done through semiconductor. And when there is a shortage, imagine, we never could have imagined that because there is a semiconductor shortage, the automobile companies, their business is going to go. They're not able to complete manufacturing the vehicle and sell because of this chip. So that is the opportunity there. And I think government has given the highest PLI in this sector. But a challenge here is there are no known big semiconductor manufacturers in India. So government has been trying for many years to bring that to India, but it hasn't worked. Now it looks as a right time. So if you find right investment opportunities, so here again, I won't look at it as a long-term opportunity because the technologies are changing. If some particular chip is not available, someone will come up with an alternative which is more easily available. Next investment opportunity, I called it as turnaround. In turnaround, we can't just put sector. It is always about individual stocks. So these stocks I picked from the same theme that we are looking at, not from outside the thing. There may be other turnaround stories in, say, automobile or a steel or a cement or a real estate, but those are not the theme or a sector I am interested in. From within what we are looking at, the businesses which I think will show a financial turnaround in the year 2022, which would lead to substantial re-rating of the stocks. So this is here I put three specific stocks here. Vodafone Idea. Now, over what has happened in the last 5-6 months on the government side, it's pretty clear that government doesn't want it to be a duopoly market. That is, the whole population being served by just two entities. They believe that at least three players are required. So that straight away means trying to help Vodafone to the extent for it to survive, so that it will also help the banks and all which have lent it money, and for a wider customer service, it is important. That is done, but the way they have restructured the receivables from the telecom industry, and also other support that they've extended. Once that message is clear, that message goes not just to the company, it's to existing investors as well as potential investors. A lot of probably external investors who are willing to put money into Vodafone were holding back because they weren't sure whether this will survive or it will going to be duopoly market. That is one, this company could be completely gone. I think that factor is more or less out of the way. So now it is about the management taking tangible steps to grow from here and showing to the market definitive ways. Two, three things which are important markers on the way to for it to stock price to go. We already have seen that from when it was running between 7, 8, 9 rupees most of the year. In the last quarter, it has gone up now to nearly double from there, about 14, 15 rupees. That's because of these things. Then certain tangible steps on the business side or investment side will lead for a further stock movement, which I think will happen during the current year. You can watch that or in anticipation invest and gain when that happens. What are the 2, 3 important things that will trigger further up move of this stock Vodafone is? First one is promoters investment. Till now, like one big sore point for external investor is that how much are you as a promoter willing to put into this business? Because here the promoter is not one individual who doesn't have much resources. You have a Birla Group on one side and a Vodafone Incorporated on the other side. So the basic logic, if I am a fund managing it, is if those promoters who have the ability to put some money are not putting a penny into this, why should I put my money into? Probably they don't believe in its future as much. But now the management has declared that promoters are looking at and willing to invest in that. So you need to wait for that to happen. When investment happens, you just, I mean, it's no fixed formula, but I look at it as common sense thing is that if promoters put X amount of money, then the market cap will go up by 3x. That is not 3x from what it is going now, but 3 times the amount of money that promoters are putting in. Now the market cap is around 25,000, 30,000 crore. So for example, if promoters put 3,000 crores investment into Vodafone Idea, I would expect that market cap should go up by 10,000 crore. That is about 3 times what they are putting in. If they put in 5,000 crore, it can probably go up by 15,000 crore, which in terms of return would be 50% from what the stock price is now. And similarly, they are looking to raise about $2 billion. That's about close to 15,000 crores from external investors. It could be mixture of debt and equity. When that happens, there again, 2x of the investment could be the growth in the market cap. So if 15,000 crore come, market cap can increase by 30,000 crore. You also need to keep in mind that this additional investment will lead to some dilution also. It doesn't mean that 30,000 crore market cap increases, your stock price doubles. It's more likely that it will go up by 40-50%. So adding these 2 factors alone, stock should double from where it is now. Then financial side performance, they already increased the price along with the other. So that also shows that telecom players have come around to the view that we can no longer be just trying to capture a little more market share by cutting down the price. So they need that for it to be sustainable. Each company is looking to increase the price and then fight on that equal basis, which is good for all the 3 telecom companies, but very, very, very good for Vodafone Idea because they need that for survival. For others, it is a little more profit. So from survival, if you're going to 100% survived and we are set to grow, then the stock revaluation happens. That is where for a same amount of price hike, if Bharti Airtel price goes up 10%, Vodafone go up 50%. It is justified because that's around 3 lakh crore market cap, whereas here you have about just 1/10 of that market cap. So the impact will be more here. So the any price increase in the telecom, we have seen it for the prepaid. I expect the postpaid also prices to increase and not very long into future and some more increases. So average revenue per user, ARPU they call it, which is now languishing at around 110 rupees. If it goes to 150 on way to say probably 175, 180 by next year, then it is a good for, then you no longer will have any concerns around survivability of Vodafone, and then it will be one of the stock fighting well. So this created opportunity. So what is the best that can happen? Probably from 15 rupees, it can go to 40, 50 rupees. And that is provided all these three I mentioned happen. But a lot of times stocks also run up ahead of their actual fundamentals, because as long as the path is visible, they are convinced that, okay, this is turned around and no longer that they'll be able to handle their debts or found a way investment, all of that, then it will have a multiplier effect. So you can watch this particular as a good turnaround story. Switzerland is another. It has a two, I think, major restructuring of the debt. Now they had a good deal last year, but was waiting for the actual management to show performance on the side. Initially, we recommended when it was going at 4-5 rupees, and then after 8-9 rupees, it is say going sideways. Then we just exited from there. But then been watching that. Now on the performance side also, we are seeing increasing order book. And even though solar is going to be the main driving in the renewable energy, wind is going to be a second or third best, but even that is a substantial size and opportunity that's there in the market. If you've seen a lot of new government contracts or tenders that have come, they're coming for what they're calling mixed or blended. So that is a particular power plant to be set up. It will be a mix of both or a hybrid wind as well as solar. So that way, Switzerland will be in business. They have the best technology in wind side, and they have a great manufacturing facilities. Just that they need to stick to a plan, and then carry out their regular business and growth. Then it can, I mean, from where it is, it can have a substantial upside. 3 Infotech, we have talked about it, and I think this year, last year, the reorganization is complete. Also, a company with 850 crore debt is now zero debt, and it is into digital space. So I think the actual performance and upside would pan out in the current year. These stocks that you're seeing on the screen, these are marked as core portfolio. You may not see much change from what was there last year or the year before, for the simple logic that we picked stocks for a 10-year horizon. So unless where something has gone wrong or some new has come up, there is no need to change it for the sake of it. So these will remain in my core portfolio. And you can see that these are all sticking to the themes that we picked up. The two, those themes which are a longer longevity. In this, even Tattva Chintan and Clean Science are not just chemical stocks. They are into chemicals which are which have a play on renewable energy. They create certain components which are, that's where it makes sense. And then either they are creating less pollution, or they are actually creating manufacturing components which are required for either electric vehicle or for renewable energy. So that would again an indirect play on the same main theme that we're looking at. I don't need to elaborate in these talks because we covered them in detail over a period of time. I'll show you some more stocks or some new ideas. So Amar Raja batteries. So one, see, why do you have? We have automobile companies. Automobile itself is not new, right? And each automobile required a battery, be it a two-wheeler or a car. That's where you have Exide and Amar Raja batteries and a couple of others. But what you need to understand is that in the current scenario, the cost of battery is probably 1% or even less than that. Whereas when we go to electric vehicle, the cost of battery is going to be 30% or 40%. What does it tell you? Simple, that say automobile companies are not going to outsource manufacturing of batteries, which forms the 30-40% of the cost. they're going to do it in-house, or they're going to find ways to do that in-house. So on the way, it may look like a battery companies are the biggest gainers with electric vehicle, because 40% of electric vehicle is battery. But then if that is that, Maruti will make their own battery, Tatas will make their own battery. They're not going to buy from Exide or Amara Raja. It may be interim measure till they are figure out and be able to do that. So everything that looks too rosy can have a negative side also, and most people tend to ignore that and run away with whatever first thought to come. I'm just sharing ideas in particular these stocks. Fame Industries, it can continue to grow. This basically because it makes a small lighting or those components in the vehicle, which remains a very small percentage of the cost of the vehicle. So no car manufacturer is probably or a two-wheeler manufacturer mind outsourcing that part. They do that well, so they continue to grow. Unlike a battery, MTAR is a high-tech and defense-related manufacturing. High-tech pipes is into water. This Adani Total Gas could be the biggest beneficiary of piped gas and gas growth in across cities. Likita, I would say, is the biggest say play on gas without actually getting into a gas company. Likita builds the infrastructure for providing piped gas to homes in cities. So I would actually put a higher percentage to Likita compared to a direct gas, because either Adani wins the tender or Esser wins it or Indian Oil wins the tender, Likita is going to be in business. So this would grow up. Then last two, Moship and RIR, you might have not heard of them. They're into semiconductor. Basically, when I'm trying to research at semiconductor manufacturing companies, why I put a big question marks there is, I mean, not enough information about them, and also too many question marks about to be comfortable to invest in. Moship looked like a genuine semiconductor company worth investing in, but and price also has run up almost vertically for both the companies. And of course, it still can go up much higher, but there are some question marks I see in there. For example, Moship, I'm seeing employees selling, directors selling, promoters selling the stock when the stock is gone up. So that is a big question mark for me. When I say recommended other say penny stocks like a Lloyd Steel or say Syncom Formulation, for me the biggest comfort there was promoters were increasing their stakes substantially. That means they have believe in the business and they see big upside on that. So once you consider the other factors, I had no hesitation in giving a buy call on that. Whereas here, I mean, I would love to see opportunity to invest in semiconductor, but it raises red flags for me that why is the promoter selling, why are directors selling, why are employees selling? Everybody seems to be selling. RIR, too little information available. I mean, you can hardly find anything on that. So it's like playing blind in a cards game without seeing the cards, which I'm not very comfortable in. But because we talked of a sector, so at least the stocks that I could even look, which happen to be in that sector, I've put it in here. I'm not recommending a buy on those unless I'm able to get more information and have the confidence that these are the stocks worth investing in. The first three are Infotech, Syncom, Lloyd Steel. They've been there before also. You can add that Orient Green also in that list. Titan Biotech and Avantil, by the time we moved in, I think their uprun had paused and they're in a sideways consolidation. They'll start running up again at some point of time. Ratan Enterprises is again a mystery. It got a 40% stake in an excellent electric bike company, but every week they seem to be announcing new business rather than growing existing business. And now I can't even count which all new businesses they have announced, and that probably reflects in stock remaining flat and not actually going up as most of our other penny stocks are doing. Secure Cloud also I mentioned and briefed it in the last video. Balu Forge is one new thing. It's more on the line of you have seen Bharat Forge with a lot of strength into Forge market. It's a very small market cap at this point of time. Some big investors are moved in, promoters are investing into that. I expect some action in this particular stock, and I expect it to do well over next few years. And that gives a opportunity. You need to again do your own research. These are all penny stocks. How much percentage to put into each stock or which to buy and all, that I would make it as a separate message with the stock, and then recommended percentage of, if you're investing 100, should 5 go into or 2, that I would put it and share it on a WhatsApp groups to you. I'm not putting into this here. I'll do that by end of the day today. I think that brings me to the end of the presentation. I'll remove the screen share. Yeah, Aditya, you just put a quantum. So that's what I'll be answering I'll be sharing in a WhatsApp post with a clear stock and the percentages that I recommend you allocate to each stock. If anyone has any other specific question, please, you can post it in the chat. So I thank you all for joining this, and I hope that you have a great 2022. I mean, I'm hoping that even this current year, we should look at a triple-digit return, as we've seen in the last 2 years. It's a tough ask based on the growth that we had in 2 years, but it's definitely doable. As the situation changes or some new developments, we can always interact and get into that. Yeah. Thank you all once again for joining. Have a great day and a great year ahead.